I don't know if you are a strategy shareholder or just a Bitcoin holder, but I think you should watch this video all the way to the end, because at the end of June, MicroStrategy or Strategy dropped a major announcement. There was a lot in it and we'll break it down in a bit, but the most explosive part is that from the time the announcement came out until last night, MicroStrategy actually sold 3,588 Bitcoins in batches. That's about $216 million used directly to pay dividends on their preferred shares. As soon as this move happened, the comment section exploded with criticism. I started receiving messages telling me that he was a traitor. Strategy have folded. They've changed. They are buying high and selling low. The scammer finally crashed. You name it. I totally get why so many people are angry. Saylor had been shouting, "We will never sell so loudly," and now he's actually doing it. It feels like a slap in the face, you know? Yeah, it's treason, but reality is pretty wild. Over the past year, in the entire Bitcoin ecosystem, the group of investors who probably made real money, in fact, might just be the ones holding MicroStrategy's preferred shares like STRC. So yeah, we have to talk about it. And in today's video, we are going to dive deep into the logic behind Saylor selling Bitcoin, about who should be really worried, who can stay calm, and how we should look at this company going forward. First, let's talk about why STRC made money, because they made money. So over the past year, Bitcoin dropped nearly 50% from its ATH. You know that. But MSTR fell even harder. It got cut in half and then some. But STRC was different. It pays dividends every 2 weeks with an annualized yield close to 12%. Its price did drop too, but when you add in the dividends, the total return stayed positive. People who bought STRC weren't betting on Bitcoin going up. They were betting that Strategy wouldn't die and that they would be paid. As long as the company stays alive, they keep getting those payments on time every 2 weeks. That bet won big over the past year. So when Saylor announced the sales, it wasn't bad news for STRC holders. It was completely actually good news. The company is openly saying that if cash gets tight, they'll sell Bitcoin to cover it, which makes my dividends even more secure. The people yelling the loudest are probably the one holding MSTR or the people who bought Bitcoin at the ATH. Depending on where you stand, the perspective is indeed totally different. But now, let me translate what this announcement actually says into plain English. Strategy currently has $2.55 billion in cash on hand, enough to cover about 26 months of dividends and interest when combined with authorized liquidity. This money came from issuing new MSTR common shares last week, raising about $1.15 billion. But instead of buying Bitcoin, they kept it as cash. So you have to remember, in the past this company would get money and immediately buy Bitcoin without pausing. But now they are choosing to hold cash, which means cash flow safety has been put ahead of expanding the Bitcoin position. They raised the STRC dividend from 11.5 to 12 effective from July. As soon as the news came out, STRC jumped back from the 70s right into the 80s. But it's still far from its $100 par value. The company said they'll review the dividend rates every month. So in plain terms, if STRC still doesn't get back near 100, they might raise the rate again. Every time they raise it, more cash goes out the door, and that pressure is real. On the buyback side, the company authorized $2 billion, half for repurchasing preferred shares and half for MSTR common shares. The preferred share part is straightforward. They can buy something with a $100 face value for $80 in the market, retire it, and basically pay off the debt as a discount while reducing future dividend obligations. It makes clear sense on the books. But then comes the explosive part of the whole announcement. The Bitcoin monetization plan. Strategy has formally established a selling mechanism. They can sell to replenish dollar reserves, to pay dividends and interest, or to do buybacks. The reserve replenishment part has a $1.25 billion cap. But for dividends, interest, and buybacks, there is no stated upper limit. That means, in theory, they could sell more than $1.25 billion, and the boundary isn't clear. Plus, the rules were barely written before they started using them. They sold 3,588 Bitcoins for $217 million to pay dividends. Okay, I thought this mechanism would sit there as a just-in-case backup. But 1 week after the announcement, they were already acting. The speed surprised me. I don't know about you, but it surprised me. When I was in Prague, I mentioned the term market inoculation. Saylor's earlier sale of 32 coins was to let everyone feel it first. The world didn't end. The company didn't collapse. Bitcoin didn't die. They planted that expectation in the market. Looking back now, those 32 coins were the clinical trial, and these 3,588 coins are the real dose. So do I think he planned this step in advance? It's hard to say he didn't. For STRC holders, this is good news. Of course, the dividends arrived and the company kept its promise. But for the people calling Saylor a traitor to the Bitcoin community, you can savor this. The day you are cursing him, he is wiring the proceeds from selling Bitcoin to others. But there is also a practical question. Strategy's average Bitcoin cost basis is around $75,000. And now he's selling below 60K. So yes, they are realizing losses. Saylor's explanation is that never sell Bitcoin was advised for regular retail investors. That doesn't apply to them because they are a finance company. They have to sell it when they need to. Personally, I think the logic holds up, of course, but after shouting that phrase so loudly, saying that was just for retail, it now feels like a pretty sharp turn. This habit of presenting the version that benefits you as eternal truth, then later explaining that your understanding was off when things changes. I've seen plenty of people like that, most of them politicians, and I don't like that. So my own take is that this announcement doesn't show any collapse signal in the short term, that's good. This time, Saylor proactively wrote selling into the company rules with defined uses and limits, that's okay. And what I like is it's still way more transparent than saying nothing and quietly selling later. So maybe it's a good thing, in a way. I've seen too many shady operations in the market. Compared to teams that only sell secretly when they are desperate and then make up excuses afterward, at least Saylor is being upfront this time. From that angle, the market's biggest fear, disorderly collapse, isn't the script we are seeing right now, but change is a real change, and there is no point sugarcoating it. People who bought Strategy before were buying the premium attached to the narrative of Saylor only buys, never sells. Now that narrative has a hole in it. I can't tell you how the market will reprice it. That question has to be answered by time. There are 3 numbers worth watching closely going forward. Can STRC get back to $100? If raising to 12% still can't put it there, it shows the market still doesn't trust this new framework. And the company may have to keep raising rates. Each increase adds more cash flow pressure. Can MSTR's premium ratio turn positive again? The entire business model of Strategy isn't really about just holding Bitcoin. We understand that. It's about using low-cost financing to buy more Bitcoin when the market gives it a premium. If the premium disappears, the flywheel loses its most important fuel. The third one, and I think it's the most critical, will Strategy keep selling Bitcoin on an ongoing basis? Occasionally, selling small amounts to manage cash flow is completely different from continuously selling to keep the whole system running. Otherwise, it would feel like a Ponzi scheme, and Peter Schiff would be right. So the first is asset management. The second means the company is surviving by consuming its assets. To tell the difference, just watch whether the Bitcoin per share is continuing to grow. That's the important number to watch. That number is more important than anything Saylor says. Don't listen to what he says. Look at the number. Look at the math. It's more important than any praise or criticisms in the comments too. I don't hold MSTR, of course. I don't hold STRC, and I have no financial relationship with this company. So about that, I'm neutral. I'm just saying that purely because I think it's worth discussing. He's really an influent person in our domain. But what I can tell you is, whether you are a Strategy shareholder or a Bitcoin holder, don't panic too much for now. But don't pretend nothing has changed either. Going forward, when looking at this company, listen less to the slogans, watch the data more, watch the math, watch the numbers, and you'll be good. This is Cédric. See you in the next one, guys.